and gentlemen, welcome once again. Welcome to the another panel discussion titled Africa's Banks Ready to Go on Cloud Computing. And the other question is full remotely services really possible? And, before diving into that, we were supposed to have at least three guests, but two of them were unfortunately not able to join us. So we have Mr. Sandeep Mohapatra, who's the Director of Digital Transformation and Technology at Absa Bank, Mauritius. And so my name is Julius Bismungu. I'm a Senior Producer and Presenter at CNBC Africa, and I'll be having a one-on-one conversation with Mr. Sandeep. Just to give you background, Deloitte predicts that the bank of 2030 will look very different from today. Facing changing consumer expectations and emerging technologies and alternative business models, banks need to start putting strategies in place now to help them prepare for this future. And you ask, what is an important indicator of the shifting landscape? Obviously, cloud computing is moving to the forefront as a focus for the Chief Information Officer, C-suite executives, and board members. And today we ask, do banks understand what cloud is? Is cloud computing really the future? How about those that have invested in cloud already? Is it paying off? So, Mr. Sandeep, to start with, what are banks' perceptions towards cloud computing technology? Do bankers really understand it, or it remains a conversation for IT executives only?
No, absolutely. I think, thank you, Julius, for the question. Interestingly enough, the pandemic has kind of forced people to look the cloud way. And while it has accelerated the entire march to digital transformation, where we're seeing years of change being condensed into a few months, and we're seeing fundamental changes in customer behavior. And that's where I think in this new normal, progressive banks, I think would be in a way should be looking into a direction where we turn the whole physical network on its head and reimagine the way we do things. Right. And in a new normal, obviously, as you would know, traditional banks will start to struggle to get meaningful customer footfalls. And branches would tend to become a low priority destination for most of our customers. Back with that, the branches are indeed a very high cost to serve model. And therefore, directionally, a smaller network of branches, would make sense, providing a very wide range of services. And for that customer who joins, and we should not be, tempted to believe that the branch networks are going to go away. They aren't. What we need to reimagine is in what shape and form do these physical or phygital outfits now emerge. And to your point, this is where the phygital strategy comes in, and this is where cloud becomes so much more important. And yes, indeed, for a lot of organizations, regulation, cloud still remains a matter of debate. But I can say you for a certainty, and given the regulations in Mauritius and for Absa Group in general, we have adopted cloud in a very, very big way. And why cloud? And why is it so much important, right? If we're talking about interlacing the physical network with emerging technologies such as artificial intelligence, you talk about face recognition, you talk about voice commands, you talk about remote KYC, you talk about Swift self-service. Cloud allows you to do all of this and more in a much faster way, to achieve that at scale, and to get the kind of resilience that'll help you craft that experience. And it's definitely no longer a boardroom debate to say, should we go the cloud way or shouldn't we go the cloud way? But it's to say, if we are embracing cloud, how do we make most out of that experience, right? How do we reimagine our physical networks to become a phygital extension of that network? And how would that network start to look like? And what we see is that we would want our customers to first face a self-service channel in a more humanized way, obviously, but a self-service channel first. And anything that is as a residue of what we cannot handle, let's say in a digital fashion, should only go as a ticket to the branch counter. So obviously it looks at optimizing that cost, having lesser footfalls, having more self-service options in this new world. And I don't know, Julius, if you followed the last presentation that I was making, where Absa Mauritius introduced Abby. And Abby is our self-service, personalized digital banking assistance that works on 24/7. And it's built on cloud. It's powered by emerging technologies such as artificial intelligence. It's got face recognition, voice recognition, swift self-service, autonomous navigation, and the likes of it. And we've now extended that across our branch network. So there are 3 humanoids and there are 30 self-service kiosks across the island doing 24/7 banking for our customers. And we've taken it now to WhatsApp. We've taken it now to our digital onboarding solution, and Abby can solve for digital KYC and the likes of it. So definitely, I think that's the way we're going, and there's no looking back.
Thanks for those insights, Sandeep. When I look at late last year, I think there was a study conducted by Accenture, basically estimating that globally banks have been migrating incrementally, and today they were saying that the average bank has 58% of its workloads in the cloud, mostly in private cloud centers. Is this the same level of adoption that we see among African banks?
Well, I think African banks have started to realize this. And if you look across the African landscape, I think it's both the fintechs as well as the banks, in a way, causing that new disruptive wave for customers. And it's happening across industries. Now, if we take, for example, payments, I think that's one area which has been massively disrupted. And you take the example of digital wallets, which is now the core of battle between traditional banks and the MNOs, right? Where the customer can securely store money, use that money, send that money straight from a smartphone. And as we see, many customers are now okay to transact via a smartphone versus how they transact in a traditional manner, especially so if it is millennials. And millennials, a study shows very clearly that they're okay to make small amount payments rather using their smartphone than using their cards. And this is the new generation of customers that are growing up associating core transactional services with technology and with non-traditional players like banks. So banks are stepping up, and the fintechs are also coming in. And if we look at that value chain, and you look at lending, for example, as a proposition, we see that there are a lot of alternate lending startups which are starting to raise funds, which are getting a platform that enables borrowers as well as lenders to be on the same platform. And they're doing it using machine learning to improve underwriting, to innovate around consumer finance at the point of sale versus a plastic card. And we're seeing that also with investing. For example, we're seeing robo-advisors come up, wherein they can manage your portfolios. They can give you advice on rebalancing your portfolios across asset classes with AI and machine learning. We see that with insurtech companies as well, who are applying new technologies, behavioral finance, data analytics, to keep the cost as well as the premiums low. And this disruption is happening across banks, across fintechs, sometimes, and across MNOs, sometimes in partnership, but sometimes also in competition. And that's pushing the boundaries of financial inclusion, that's pushing the boundaries of adoption of emerging technologies, where the customers would start to get spoiled for choices, and they would start to not necessarily associate finances or payments as just something which banks are the go-to solutions. And I think Africa is getting mindful of that change, and we're seeing these changes unfold across.
You mentioned MNOs, and it got me thinking. One of the biggest issues we've talked about in the past, and it's a conversation among a few countries. Interoperability. When you talk about payments, for instance, as a sector that has seen some sort of remarkable growth, right? You see MNOs driving this growth in the payment sector. But one of the things that we don't see is the interoperability among these service providers. Do you think it's the issue of the infrastructure? Do you think banks telcos are just want to be mean and do business among this themselves, other than opening up their infrastructure and platforms among other telecoms?
Absolutely. I think there is some merit to what you're saying, but it's also about how the regulatory environment, kind of promotes that inclusivity, that lack of monopoly, and that climate of change. So, for example, if we look at Mauritius as an example, Mauritius adopted an open banking regime whereby they introduced something called the instant payment rails. And they introduced, along with the instant payment rails, a standard QR. They also introduced open banking in the sense that I could be a non-Absa customer and use the Absa app to actually register a non-bank within the app, see its balances, see its last 10 transactions, use that account to debit and to credit another bank account altogether within the Absa app. So it's also the regulators trying to step in and provide that meaningful direction for it to become truly interoperable, rather than having a proprietary QR somewhere where then once you've gotten into the masses, you start to become more exclusive. You start to build your own ecosystem versus the regulator giving you a direction to say, okay, here's a standard QR in the country. Everybody needs to adopt and move to the standard QR. And it opens up that payment ecosystem. It opens up that climate of change. And it gives everyone a level playing field wherein there is no longer a monopoly versus there is the customer's choice to see who's the best service provider, which will give me the most value for my money. And who will give me the right customer experience as probably the lowest possible price point. And I think those are some of the conversations that banks, financial institutions are making with the regulators. And some of these regulators are progressively bringing that change.
I think you mentioned a very important point, because very often we see startups, especially those, let's say, in financial technology, complaining that, early regulation of, these innovations actually kind of hinder the growth of these innovations. And, when you look at the space of the cloud computing, for instance, do you think regulatory compliance in any way promotes the adoption of these technology services, or it doesn't?
So again, like I said, it really depends on the regulatory regime that we're talking about. And at one spectrum, we are seeing people getting very, very attached to saying, no, we need local data privacy norms. We will not allow cross-border transmission of data, and therefore adoption of cloud clearly becomes an issue. And there are other, regulatory jurisdictions. For example, in Mauritius, it enables you to go cloud. It's got a governance process, but it's fairly simple. It allows you to not only go on cloud, it allows you to even store data, including PI data, on cloud, as long as it's encrypted, as long as the customer's privacy is respected, as long as the data can be segregated. It allows for all of that. And therefore, I think it's also important that how our regulators shape this whole fintech landscape, right? And rather probably introduce that climate of change or be enablers to that change. I think one of the examples is that some of these African markets today, for example, have got a CKYC regime, right? Where the data is centrally captured, not only just for individuals, but also for companies. And it allows you then to do frictionless customer onboarding in a matter of minutes. And then there are some jurisdictions which only allow you a face-to-face KYC. Now that comes in your way of digital transformation. You can do everything digitally, but then you need to invite the customer to the branch, and it doesn't suddenly make sense. Even on the lending landscape, if you see, there are these credit bureaus, and some of these credit bureaus today operate traditionally by not giving you a credit score. They give you a PDF of a document that one needs to subjectively go through, and then there are jurisdictions which allow you a credit score, and all of these start to shape the way in which the fintech evolves in that country. And yeah, so I think there is no level playing field, so to say, and each of these countries are unique in that sense.
Sandeep, do you think banks like yourself are under pressure in any way for radical change? And you can probably talk to us whether you think COVID-19 has given new agents to the banking cloud imperative.
Absolutely. I think it was. I think banking was starting to get challenged in the pre-COVID era itself, not only just from fintechs but also from the global players, the major global players such as the Googles, the Apple, the Facebook, the Amazon, the Microsoft, the Alibabas, the Tencents of the world, and they were trying to use their technology prowess, their large customer database, and their big data analytics to start to get into some of those profitable, valuable parts, mainly payments, to get into that game. And I think with COVID-19, what's happened is obviously all of this has accelerated to the next level. And I don't think today it's a matter of question. If you look at the recent survey, which I think PwC did, 70% of the business leaders say that the speed of change is a matter of concern for them, especially disruptive technology change. And you look at examples. So you look at what time it took, a country like United States to get landline phones. It took approximately, I think, 70 odd years for 50% of the population to have a landline phone, and smartphone did it under 10 years. And now we're looking at blockchain, which is going from a notebook sketch to a practical use in less than half the time that internet took to penetrate across the world. So we are seeing these very rapid, very sudden changes, and it's no longer probably a question, like I said, of choice, but a matter of survival, if I may put it this way, that they need to embrace, they need to move quickly, or else they might dissolve into oblivion.
Let's talk about something else very important, which is investments, right? All these initiatives that require investment, and
Absolutely.
When you look at the landscape for investing in cloud computing technology, for instance, do you think banks have enough muscle to do that? Do you think African banks, have enough financial capability to put aside the money to invest in cloud computing? And when you look at the trends, for instance, what is it that we see across the region the banks are doing when it comes to investing in cloud computing?
So I think cloud computing actually makes a lot of commercial sense, apart from making a lot of sense in terms of emerging tech being embedded. Cloud by its nature means you don't invest upfront in your infrastructures anymore. You don't need to replace your infrastructures anymore. Resilience is already built into that infrastructure. You don't need to worry about scalability. And it's a very pay-as-you-go model. So cloud in itself kind of gives you that justification to be more cost effective, if I may put this way. However, to your point, there is a cost of investment. And I think banks are starting to realize that there is a J curve involved here. And in that J curve, you will need to invest and you will need to wait for the gestation period to kick in. And once it does, your cost doesn't go up significantly while your results or your performance starts to hit that J curve, and where you see exponential growth. And I think this is also where the fintechs of the world are coming in, because earlier the big tech companies or the core application providers used to be extremely cost heavy, and it doesn't really allow you a room for experimentation when you're doing something. But today, I think with the fintechs, you can achieve the same thing through a partnership or through a grounds up solution at probably 1/50th of the amount which those big tech companies.
I think we've lost Sandeep. Let's see if we can join again.
Yeah, Julius, can
So
you hear
we've
me
lost.
now?
Yeah.
Yeah, sorry. All right. So I was saying, when it comes to cost, I think the association of fintechs with fintechs to co-create or to experiment something, the cost has become much more affordable. Plus, if you look at some of these cloud-based services which are available straight off the shelf, that further brings your price point down. And I think banks are starting to realize that instead of license-based products, for example, databases, people are moving to more open architecture-based solutions, which then starts to bring that price point down consistently. And I think this is where banks are starting to break away from a very traditional technology-based investment, which required huge amounts of money in terms of infrastructure, in terms of licenses, or in terms of building everything grounds up. And it's becoming a more open world.
Yeah. Sandeep, does that mean that the top, the big three, and here I'm referring to Microsoft, the Amazon, and Google, does that mean that they no longer have a monopoly to determine the cost of these services?
Absolutely. So if you see some of these landscape, even Uber, for example, could not succeed in countries like China, right? With all the money, with all the digital prowess, with all the large customer base, everything. So I think the timing is important. Unless you move at speed and you already start to get what we call the network effect, right? Where, because you are prevalent everywhere, you automatically start to attract a large number of buyers and sellers. And once you've gotten into the network effect, it becomes very difficult for a new incumbent to then shake things up, be it the Amazon or the Googles even. But if you are a late entrant to that market, and in today's world, as you would know, the winner takes it all largely. So if you are a digital disruptor and you've taken the mass of the market, it becomes very difficult then to shake that status quo, unless there is a very strong convenience offered at an extremely low price point otherwise. Um, but but yeah but I think it all boils down to the timing, and it all boils down to how you architect that solution.
Mm. Uh, uh, so I'm looking at the future now, right? Uh, for sometimes now, banks have been, closing branches or reducing the number of branches in favor of digital services for quite some time. How do you think cloud technology, cloud computing technology, will disrupt the future of financial technology? I mean, the future of financial services.
Absolutely. So if I look at how the so like I said, right? So in the COVID world, in this new world, people no longer wish to go to physical engagements or physical networks, and we're seeing a very fundamental shift in the way in which people approach physical networks. We are entering this whole concept of an isolation economy versus a very social and a sharing economy where people used to come together. Physical engagements used to be the point of interaction, the point of transaction, and it's no longer the case. And as progressive banks, I think people will break out of that traditional branch banking model. It's not to say, like I said, the branch model is going to go away or the physical network is going to go away, but it's got to be completely reimagined in this new world. And I think cloud is a great enabler to start some of those conversations. So I was saying you that, for example, Abby in Absa Mauritius is the first point of interaction today at a branch in Absa in Mauritius. So if you go to any branch, you first face a kiosk or a humanoid today, and that's built out of cloud. That's interlaced with emerging tech like artificial intelligence, natural language processing, with face ID detection, with voice commands, and things like that. And people can do swift self-service and go back. And if Abby cannot then actually service your request, it gives you a branch counter ticket. What also happens interestingly is that because it's built entirely on cloud, and this becomes the first point of interaction, we start to get very rich analytics and dashboard on the customer behavior as to what kind of customers go to the branch, how many footfalls, what kind of services do they do with the branch. And then we start upgrading our solutions to make it more self-service oriented. And if I look some of the things that we saw when we did an analysis of when we first launched Abby, is that we saw some of our customers were approaching the bank because of traditional services. And we started to build APIs into our core applications to do it as a self-service. Similarly, people were looking for multilingual solutions because Mauritius as a part here is predominantly French-speaking population. So we went one step at a time. We saw those analytics as to what they're trying to tell us, and we started to re-architect some of the solutions. And today, if you look at it, the way we're heading is that we want to shrink our physical branch network, moving from very isolated, large, profusely investing in infrastructure, in furniture, etc., to a more leaner branch, which is a digital-first branch with few humans, with large variety of skills, and with a large set of services that can be enabled from therein. And that's where we want to directionally be, to allow customers to do self-service even at a physical point, or what we call a phygital strategy. So anywhere that the customer goes to, he's got a self-service option already built in.
As we wrap up this conversation, in just 2 sentences, what are the risks that will be faced by banks that do not move quickly into that space?
I think it's just a matter of survival. I'm being honest here. If we do not move, I do not see a reason why customers would choose you anymore. And it just boils down to that matter of survival. And I think, like I said, in a technology world, the winner takes it all probably. So you might want to move at speed and at scale, and not wait for you to be left behind.
Thank you so much, Mr. Sandeep Mohapatra, Director of Digital Transformation and Technology at Absa Bank Mauritius. Those were really great insights, and I think to the listeners and bankers who are following the conversation, I guess this is the right time for you to go to the cloud. That was all we had for this session. Thank you very much for following. See you next time.
Thank you, Julius. Pleasure.